Now let us discuss another standard, which is the PFRS 5, or non-current asset held for sale and discontinued operation. So what is a non-current asset? So non-current assets are the assets that does not meet the definition of a current asset. So these are the assets that can be used for more than 1 year. So when does a non-current asset can be classified as held for sale? So a non-current asset can be classified as held for sale if the carrying amount will be recovered principally through a sales transaction rather than through continuing use. So which means once a non-current asset will no longer be used, instead it will be sold, it can be classified now under PFRS 5, which is asset held for sale. So we have two conditions for a non-current asset to be classified as a held for sale. So first is the asset or the disposal group. First is the asset or the disposal group is available for immediate sale in the present condition, subject only to terms that are usual and customary for sale of such assets or disposal group. So when we say available for immediate sale, it does not necessarily mean that immediately the asset can be sold. So when we say available for immediate sale, it means that the non-current asset is available for sale after consideration of things that are usual, normal, or customary for the sale of such assets or disposal group. An example would be selling a house and lot. Of course, if the house and lot is being rented, it will only be available for immediate sale after the tenant leaves the premises. So even though the tenant is still occupying the house and lot, it can still be classified as held for sale because it is usual and customary that the tenant must first leave the premises before it can be sold. So letter B is the sale must be highly probable. So when we say highly probable, we have 5 criteria before we can consider that a sale is highly probable. First is the management must be committed to a plan to sell. Next is an active program to locate a buyer and complete the plan must have been initiated. Third is the sale is expected to be a completed sale within 1 year from the date of classification as held for sale. Fourth is it must be actively marketed for a sales price that is reasonable in relation to the fair value. Then last is actions required to complete the plan indicate that it is unlikely that the plan will be significantly changed or withdrawn. So for the third requirement to become highly probable, it does not necessarily mean that the sale must be completed within 1 year after the reclassification, because there are situations that the sale could extend for more than 1 year. And the classification as non-current asset held for sale can still continue as long as the situations or the conditions that lead to the extension beyond 1 year is beyond the action of the entity. So if the entity has no control to situations that led the completion of the sale for more than 1 year, hence the non-current asset held for sale classification can still be applied. So once a non-current asset is classified as held for sale, it will be measured at the lower amount between the carrying value and fair value less cost to sell. So this measurement shall apply as long as these requirements under PFRS 5 still exist. And also take note that before a non-current asset can be classified as held for sale, all these conditions must be present. So these two, which is the available for immediate sale and highly probable. And all requisites for a sale to become highly probable must also be present. So let us answer an illustrative problem so we can better see the accounting procedures on the non-current asset held for sale under the PFRS 5. So on January 1, 2015, ABC Company purchased equipment costing 1 million pesos that has a 10-year useful life. The equipment is estimated to have a residual amount of 100,000 pesos. So which means that at the end of useful life of 10 years, the equipment can still be salvaged at an amount of 100,000 pesos. Then on April 1, 2020, which is after more than 5 years, ABC Company decided to sell the equipment and is currently searching for a possible buyer. On the same date, the fair value of the equipment is 500,000 pesos with an estimated cost to sell of 20,000 pesos. It is expected that the equipment can be sold on January 1, 2021. Additional information were provided during the time ABC Company is actively looking for ways to sell the equipment. So we have information about the fair value and estimated cost to sell of the equipment for the dates December 31, 2020, 2021, and 2022. So on July 1, 2023, ABC Company decided not to sell the equipment due to lack of interested buyer that is caused by the introduction of new and advanced technology offered by equipment with the same purpose. On the same date, the equipment has a fair value of 224,000 pesos. So the requirements is prepare the necessary journal entries in the books of ABC Company, assuming the entity accounts its fixed asset under the following independent assumptions. Letter A is cost model and case B is revaluation model. So if you can still remember in Intermediate Accounting 1, we have two accounting policies that is used in accounting for property, plant, and equipment. So those are a cost model and revaluation model. So our non-current asset is an equipment, which is a property, plant, and equipment. So let us answer the problem using case A. So it was purchased on January 1, 2015. Then 5 years after, the equipment has been decided to be sold. So in order for us to classify the equipment as held for sale on April 1, 2020, let us first compute the carrying value of the equipment 5 years after it was purchased. So let us start compute the carrying value as of the reclassification date, April 1, 2020. So that is starting from acquisition cost 1 million less the salvage value or residual value of 100,000 pesos. So we have a depreciable cost of 900,000 pesos. And the estimated useful life, which is in years, is 10 years. So our annual depreciation is 90,000 pesos. Then let us divide this by the number of months in a year, which is 12 months. So our monthly depreciation is 7,500. So I have determined the monthly depreciation because it is easier for us to compute the depreciation, especially if the depreciation to be recorded in a year is not equal to exactly 12 months. So let us now compute the April 1 carrying value, and that will start with the acquisition cost of 1 million. Then let us deduct the accumulated depreciation, which is equal to 5 years and 3 months. So why is it 5 years and 3 months? Because that is from January 1, 2015 until April 1, 2020. So if we will compute it in the number of months, so that will be 63 months. So the depreciation for 63 months or 5 years and 3 months is 472,500 or 7,500, which is the monthly depreciation multiplied by 63 months. So our book value as of April 1, 2020, the date of reclassification, is 527,500. Then after we have determined the carrying amount, we need to determine the another amount, which is the fair value less cost to sell, because the non-current asset held for sale must be measured at the lower between the two, lower between carrying value and fair value less cost to sell. So the carrying value is 527,500. Then the fair value as of April 1, 2020 is 530,000 pesos. However, the amount we need is the fair value less cost to sell. So we need to deduct the 5,000 pesos, which is the estimated cost to sell as of April 1, 2020. So the fair value less cost to sell is 525,000 pesos. So this is the fair value net of disposal cost. Disposal cost is also the cost to sell. So the unadjusted book value is 527,500, and that is our book value computed after we depreciated for 5 years and 3 months. And now we will compare 527,500 against 525,000, and the lower amount is 525,000. So which means that the unadjusted book value of 527,500 should be adjusted in order for us to measure the non-current asset held for sale at 525,000 pesos. And the adjustment will be a decrease of 2,500, and this decrease must be recorded as an impairment loss. So let us now monitor our impairment loss. So since this is the first time we recorded the impairment loss, so we have no prior period impairment losses. However, it will increase on April 1, 2020 for 2,500. And since there is no reversal yet, because again, this is our first time to record the impairment loss, the cumulative balance as of April 1, 2020 is 2,500, and that is for the impairment loss. Now, let's proceed to December 31, 2020. So, let us define first what is cost to sell. So, the cost to sell includes the incremental costs that are directly attributable to the disposal of an asset or a disposal group, which excludes the finance costs and income tax expense. When we say finance costs, these are the interest expense. So, those are the most common finance costs. So, PFRS 5, paragraph 17, when the sale is expected to occur beyond 1 year, the entity shall measure the cost to sell at their present value. Any increase in the present value of the cost to sell that arises from the passage of time shall be presented in profit or loss as a financing cost. So, as I have said, that the requirement to become a sale as a highly probable, the sale should occur 1 year after the reclassification date. Again, it is still allowed to apply PFRS 5 even though the sale might occur for more than 1 year as long as the situation or the conditions are beyond the control of the entity. And once it is expected to be sold for more than 1 year, the cost to sell shall be discounted at their present value. And for property, plant, and equipment that is reclassified to PFRS 5, so property, plant, and equipment are subject to depreciation, and for intangible assets, they are subject to amortization. So what will happen to these types of assets? So under PFRS 5, paragraph 25, an entity shall not depreciate or amortize a non-current asset while it is classified as held for sale, or while it is part of a disposal group classified as held for sale. Interest and other expenses attributable to the liabilities of a disposal group classified as held for sale shall continue to be recognized. So, which means after April 1, 2020, which is the reclassification date, we will no longer continue to depreciate the equipment because it is now under the PFRS 5. So which means that starting April 1, 2020, the non-current asset held for sale should be measured at the lower between the carrying value and fair value less cost to sell. So by December 31, 2020, we will now again compare the carrying value against the fair value less cost to sell as of December 31, 2020. So based on the information, our fair value is 525,000, and that is December 31, 2020. Then our cost to sell is 8,000 pesos. So the fair value, which is net of disposal costs, so the disposal cost is again the cost to sell. So we have a 517,000 pesos. And the carrying value is 525,000 pesos. So this is the adjusted book value that we have recorded on April 1, 2020. So by December 31, 2020, this is considered the carrying value. And this is not yet updated because the fair value less cost to sell is different as of this date. Then we will compare the two, and between the two, the lower amount is 517,000. That is why, again, it has a different color. So, which means that as of December 31, 2020, the asset held for sale must be carried at 517. And since it is currently recorded at 525, there is an additional decrease of 8,000 pesos in order for us to reduce the amount to 517,000 pesos. So again, let us update our impairment loss monitoring. So, as of December 31, 2020, we have already recorded a prior period impairment loss of 2,500, and it will increase again as of the end of 2020 for 8,000 pesos. So, our cumulative balance is 10,500. So, the 10,500 impairment loss was recorded in April 1 for 2,500 and December 31, 2020 for 8,000. So this is the cumulative balance of impairment loss, 10,500. Again, the impairment loss is presented in the income statement, which is part of the other expenses. And we are just only monitoring the cumulative balance because there is a rule on the reversal of impairment loss. So the reversal of impairment loss will be discussed later on in this discussion. Then again, December 31, 2021, since the equipment is not yet sold, we will still measure the equipment as of this date between the lower amount between the carrying value and the fair value less cost to sell. So for December 31, 2021, our prior period impairment loss is 10,500 pesos. So let us compute now the fair value less cost to sell for 2021. So that is 535,000 fair value with less cost to sell of 5,000 pesos. So we have a 530,000 pesos fair value, which is net of disposal cost. Then let us compare that to our unadjusted book value, which is 517,000 pesos. So the 517,000 pesos is the amount we have recorded on December 31, 2020. And since this is not subjected to depreciation, as of December 31, 2021, it still remains at 517,000 pesos. So the lower amount is 517,000 pesos between 530 and 517. So since this is the lower amount and this is already the amount recorded in the books, it means that there will be no adjustment. And the adjustments that we have recorded in the previous periods are only decreases. So the question is, are we allowed to make an increase as an adjustment? So the answer is yes, we are allowed to an increase for an adjustment. However, the increase allowed is only up to the amount of the cumulative balance of the impairment loss that we have recorded in the previous period. And how much is that? That is only at 10,500 pesos. So if ever that there will be an increase during the year, it should not exceed 10,500 pesos. So for this case, as of December 31, 2021, our book value is 517,000 pesos. And the fair value less cost to sell is 530,000 pesos. So in this case, we can only increase up to 10,500. So the adjusted book value is 527,500. So if you notice, if we reverse the full amount of impairment loss previously recorded at 10,500, the book value goes back to its original book value at reclassification date, which is 527,500. And that is only the case if the cumulative balance of the impairment loss is fully reversed, which applies in this case. So again, we are only allowed to increase up to the amount of impairment loss previously recorded. So by the end of December 31, 2021, there is a reversal of 10,500, and that is the increase. So that is why the impairment loss cumulative balance as of 2021 is 0, because again, it has been fully reversed in 2021. So let us now proceed to 2022. So for 2022, the fair value is 250,000 pesos. And then the cost to sell is 20,000 pesos. So our fair value less cost to sell is 230,000 pesos. And the unadjusted book value is 527,500. Again, this is the amount of book value because we have adjusted the asset held for sale in 2021. So this time, the lower amount is 230,000 pesos. So which means that, again, we will record an impairment loss or decrease of 297,500 so that the asset held for sale will be carried at 230,000 pesos, which is the lower amount. So again, let us update the monitoring of our impairment loss. So in 2022, there will be an addition of 297,500. So that will be the cumulative balance as of 2022. Again, in the succeeding periods, in case the asset is still not yet sold, we are allowed for a reversal or an increase only up to an amount of 297,500. Any increase that is excess of the cumulative balance of the impairment loss is not allowed. So now let us prepare the necessary journal entries. So case A, we will use the cost model. So using cost model, so on April 1, 2020, so we will record an impairment loss of 2,500. So that is based on our schedule above. Then we need to credit accumulated depreciation of 2,500. So when we record impairment loss for PPE, our credit is to accumulated depreciation. Then next is to now reclassify the equipment to equipment held for sale. So that is by derecognizing the equipment, so the amount of equipment and the accumulated depreciation. So let us credit equipment for 1 million pesos. So this is the original cost of the equipment. Then let us debit the accumulated depreciation, which is 475,000. So this is the balance of the accumulated depreciation right after we have recorded the impairment loss of 2,500. Then debit to equipment held for sale, which is 525,000 pesos. So this is the lower amount between the unadjusted book value and the fair value less cost to sell. So this is the 525,000. So on April 1, 2020, our non-current asset held for sale is measured at 525,000 pesos. Then let's proceed to December 31, 2020. So on this date, we will record an additional impairment loss of 8,000 pesos. So this is the 8,000 pesos in our schedule. Then credit equipment held for sale for 8,000 pesos. So our credit is directly to the account of equipment held for sale because there will be no more accumulated depreciation account for non-current assets held for sale. So this is our entry. Then on December 31, 2021, we have no impairment loss, but we have a reversal of cumulative balance of our impairment loss for 10,500. So that will be a debit to equipment held for sale because we will increase the asset to 527,500 and credit gain on reversal of impairment of 10,500. So be reminded that the impairment loss account and gain on reversal of impairment are both P&L accounts. So they will be presented in the income statement. Then let's proceed to 2022. So for December 31, 2022, we now again recorded an impairment loss of 297,500 and the credit would be to equipment held for sale also at 297,500. So by July 1, 2023, ABC Company will again reclassify the asset back to property, plant, and equipment. And why is that? Because as of July 1, 2023, the conditions required for a non-current asset held for sale is now not present because ABC Company decided not to sell the equipment. So which means that the sale is now not highly probable. So what do we do if the asset will no longer be classified as a non-current asset held for sale? So once a non-current asset will no longer be held for sale, so this will be our procedure. So the carrying amount at the time the asset ceases to be held for sale will be compared to the lower between the recoverable amount and the carrying amount as if there had been no reclassification to non-current asset held for sale. So this will be our procedure. So we will determine the recoverable amount of the non-current asset. And how do we determine the recoverable amount? This is the higher between the fair value less cost to sell and value in use. So what is the value in use? This is the present value of the estimated cash flows expected to arise from the continuing use of an asset and from its disposal at the end of its useful life. Then once we determine the recoverable amount for the asset, we will compare it to the carrying amount should there be no reclassification happened, which means that we will determine the carrying value of the asset as if it is still continued to be carried as PPE starting April 1, 2020 to July 1, 2023. So which means that this carrying value is the carrying value as if nothing happened, as if we did not use at all PFRS 5. So once we determine the carrying value and the recoverable amount, we will determine the lower amount between the two. And the lower amount between the two will be subtracted from the carrying amount of the non-current asset held for sale. So this is the current balance of our asset held for sale recorded in the books. Then any difference will be accounted as follows. If we are using the cost model for accounting for property, plant, and equipment, any changes will be in P&L. However, if the PPE is accounted for using the revaluation model, any decrease will be an adjustment to revaluation surplus. And in excess of the revaluation surplus, it will be recorded in P&L. However, if there will be an increase, any increase will always be recorded as part of the revaluation surplus. So let us now compute the book value first of the equipment should there be no reclassification to PFRS 5. So the book value at the reclassification date is 527,500, and this is the depreciated value as of April 1, 2020. So if you can still remember, April 1, 2020 is the reclassification date. Then we will depreciate this value from April 1, 2020 to July 1, 2023. Again, we will compute the carrying value as if there had been no reclassification to PFRS 5 during this period. So let us now compute the depreciation that should have been recorded if this is still continued to be classified as PPE. So in 2020, this is 67,500 and this is for 9 months. 2021 is 1 whole year, 90,000. 2022 is 90,000 and 2023 is only for 6 months. So that is 45,000 pesos. So that is until July 1, 2023. So which means that if there had been no reclassification to PFRS 5, the book value that should have been recorded for the equipment as a PPE, not a non-current asset held for sale, is 235,000 pesos. So the carrying amount, should there be no reclassification, is 235,000 pesos. Now, let us determine the recoverable amount. So based on the problem, the recoverable amount is 224,000 because this is the fair value. So the 235,000 book value will be compared against the recoverable amount of 224,000 pesos. And of course, the lower amount is 224,000 pesos. So 235 compared to 224, the lower amount is 224. Then this will be subtracted against the amount being carried in the books. And as of July 1, 2023, the carrying amount of the non-current asset held for sale is at 230,000 pesos. So which means that there will be a 6,000 decrease. So from 230, it should be recorded at 224,000 pesos. And since we are using the cost model, any changes will be recorded in income statement. So this is an impairment loss. So our journal entry on July 1, 2023 is to debit equipment at 224,000 pesos because this is the lower amount. And we will now derecognize the equipment held for sale. So credit equipment held for sale, which is recorded currently at 230,000 pesos. Then debit impairment loss for 6,000 pesos. So these are the procedure in accounting for non-current asset held for sale using cost model. Now let's proceed to revaluation model. So to continue with case B, so the revaluation model, so this will be our procedure. So prior to reclassification date, so before April 1, 2020, we need to reclassify the non-current asset to its fair value, regardless whether the fair value is higher or lower than the carrying value. So if there will be an increase, it will be an addition to the revaluation surplus. However, if there is no existing revaluation surplus and there are previous impairment that were recorded, it will be recorded in P&L for an amount enough to reverse the impairment previously recorded. And if the fair value is lower than the carrying value, it will be a decrease in the revaluation surplus if the revaluation surplus has a balance, and if the revaluation surplus has no balance, it will be recorded in P&L as an impairment loss. And at reclassification date, after we have remeasured the non-current asset to its fair value, it will be remeasured at fair value less cost of disposal. And the impairment loss to be recorded if the revaluation model is used is the disposal cost. And the subsequent measurement is similar for both cost model and revaluation model. So previously under cost model, this is the procedure that we did. And for the revaluation, this is the procedure that we will follow for the case B. So to continue with case B, so let us start. So the fair value for April 1, 2020 is 530,000 pesos. So the cost to sell is 5,000 pesos. So which means that the fair value net of disposal cost or cost to sell is 525,000 pesos. And the unadjusted book value is 527,500. And this is the carrying value of the equipment as a property, plant, and equipment. So this is the depreciated value. However, since we are using the revaluation model, before the reclassification date, immediately, the property should be revalued at fair value, regardless whether it is a decrease or an increase. And since the fair value is 530,000 pesos, and the book value is currently recorded at 527,500, there must be a revaluation surplus of 2,500 because this is an increase, so that the book value will be recorded prior to reclassification at fair value of 530,000 pesos. And from the amount of 530,000 pesos, in order for us to measure the asset held for sale at fair value less cost to sell, we will reduce this by the amount of disposal cost or cost to sell of 5,000 pesos. So this will be our impairment loss. So that the adjusted book value at reclassification date is 525,000 pesos. So let us now monitor our impairment loss again. Again, the need for the monitoring of impairment loss is for the reversal of the impairment loss in case there will be an increase in the fair value. So that is why it is very important to monitor the cumulative balance of impairment loss recorded in the prior periods. So for prior period, we have no balance because this is the first time we are recording in an impairment loss. So the addition to impairment loss is 5,000 and there is no reversal yet. So that is why the cumulative balance as of April 1 is the 5,000 pesos currently recorded. So let's proceed to 2020 So by December 31, 2020, the fair value is 525, the cost to sell is 8,000. So basically, the information is similar to case A, except for the accounting procedure. So the fair value net of disposal cost is 517,000. So by this time, the unadjusted book value is still at 525,000 pesos. So the procedure now is similar to cost model. Cost model and revaluation surplus only differ in the procedure during the start or prior to the start of reclassification and at the end of reclassification as held for sale if there is a change of plan to sell the non-current asset. So since our procedure now is similar to cost model, so we will compare the fair value less cost to sell of 517 and the carrying value of 525. And of course, the lower amount is 517. So we need to decrease the carrying value to 517. So with an impairment loss of 8,000 pesos. So to monitor our impairment loss schedule, so we have a cumulative balance at the start of 5,000 and this will increase by 8,000. So the cumulative balance as of December 31, 2020 for impairment loss recorded in the prior periods is 13,000 pesos. So this means that in 2021, we will start the year with a cumulative balance of 13,000 pesos of impairment loss. So for December 31, 2021, same procedure as in cost model. So we will compare the fair value less cost to sell and the carrying amount. So the fair value less cost to sell is 530,000 pesos and the carrying value is 517,000 pesos. Again, the lower amount is the 517,000 pesos. And at the start of 2021, we have a previously recorded impairment loss of 13,000 pesos. And the amount of increase that we are allowed to record is only up to the extent of the cumulative balance of impairment loss. So which means that if we will record an increase in 2021, it should not be greater than 13,000 pesos. And looking at the difference between 530 and 517,000, the difference is at exactly 13,000 pesos. So it means that we can exhaust the full 13,000 pesos. So we increase the asset by 13,000 pesos and the adjusted book value is now at 530,000 pesos. So basically the procedure in 2021 that we did is similar to what we did in case A. So same procedure. So at the end of 2021, there is no more cumulative balance of impairment loss because everything has been reversed. So let us now proceed to 2022. So for 2022, same procedure. So we will compare the fair value less cost to sell, and that is 230,000 pesos, against the carrying value of 530,000 pesos. And of course, the lower amount is 230,000 pesos. And this time again, we will have an impairment loss of 300,000 pesos. So that we will record the asset held for sale at 230 pesos. So to update our impairment loss monitoring schedule, so we will add at 300,000 pesos and this will be the cumulative balance as of the end of 2022, which means that if there will be an increase in the succeeding period in case that the asset is still held for sale, any increases will only be up to 300,000 pesos. So now let us prepare the journal entries in the books. So to start the journal entry for revaluation model, so let us first record the revaluation surplus of 2,500. And since we have two approaches in recording revaluation, I will use the elimination method where we will eliminate in full the accumulated depreciation. So to do this, on April 1, 2020, we credit revaluation surplus of 2,500 and that is the difference between 530 and 527,500. And we debit all the accumulated depreciation of 472,500, which is the recorded depreciation starting January 1, 2015 until April 1, 2020. And credit to equipment of 470,000 pesos. So by crediting equipment at 470,000 pesos, this will bring the equipment account to 530,000 pesos, which is the fair value of the equipment. Again, the cost of the equipment is 1 million. That is why crediting 470 will have a difference of 530. So now let us record the equipment held for sale. So by crediting equipment at 530,000 pesos and debiting equipment held for sale for 530,000 pesos. So which means that by crediting 470 and 530 under the equipment account, we already did recognize the equipment account for 1 million pesos. Then let us record the impairment loss, which is equal to the disposal cost or cost to sell of 5,000 pesos. So credit to equipment held for sale. So after this impairment loss, the carrying value on April 1, 2020 is already at 525,000 pesos. Then by December 31, 2020, so this time the journal entries will be similar to what we did under the cost model. So basically, the procedures in December 31, 2020, 2021, and 2022 are the same. But of course, the amounts are different based on the schedule that we did. So for 2020, December 31, the impairment loss based on our schedule is 8,000 pesos. Then in December 31, 2021, our gain on reversal is not 10,500, it is 13,000 pesos. However, the account titles being recorded are similar in case A. Then for December 31, 2022, so same account titles but different amount because our impairment loss in case B is 300,000 pesos. Then on July 1, 2023, there is a change of plan to sell. So the equipment is no longer held for sale. That is why we need to reclassify the equipment back to property, plant, and equipment. And again, this procedure is similar. However, the difference is the treatment of the gain and loss. So let us summarize the rules on the recognition of gains and losses under PFRS 5 using this illustration. So again, the gains and losses that we refer here are the gains and losses from the increases and decreases in the fair value of the non-current asset. So let us start with initial recognition under PFRS 5. So at the time the non-current asset becomes an asset held for sale, we will determine the fair value less cost to sell. The fair value less cost to sell could be higher or lower than the carrying value. So in case the fair value less cost to sell is greater than the carrying value, at initial measurement, any increase is being ignored. And that is at initial recognition. What we record at initial recognition are decreases in fair value. So which means what is allowed at initial recognition are only decreases in fair value, and that is recorded as an impairment loss. Then, subsequent to initial recognition, the fair value less cost to sell of the non-current asset could again fluctuate. So it could either be an increase or decrease. So if there is a decrease in the fair value less cost to sell of the non-current asset subsequent to initial recognition, again, that will be recorded as an additional impairment loss. However, if the fair value less cost to sell subsequent to initial recognition is more than the carrying value, we are now allowed to record any increases. And the increase that we are allowed to record is only up to the extent of the impairment loss previously recorded. If the increase in fair value is more than the impairment loss previously recorded, any excess of the increase in the fair value subsequent to initial recognition is ignored. So basically, the rule under PFRS that there is no limit as to the recording of the decreases in fair value. However, for the increases, there is a rule that the increases to be recorded should only be up to the extent of the impairment losses previously recorded. So now, let us summarize the rules on the application of the revaluation model for a non-current asset. Again, this rule only applies before and after the application of PFRS 5. And this is used for a non-current asset that is not yet held for sale. Because under PFRS 5, we do not record any revaluation surplus. What we record under PFRS 5 are impairment losses and any gain from reversal of impairment losses. So we do not record a revaluation surplus under the PFRS 5 during the time the non-current asset is held for sale. So again, this rule only applies before and after the classification of the non-current asset as an asset held for sale, and that is prior to the reclassification and when the non-current asset ceases to be held for sale. So under revaluation model, any fluctuations in the fair value are allowed to be recognized, whether it is an increase and decrease, and there is no limit as to the amount. So let us discuss the increase. So if there is an increase in the fair value, any increase will first be applied to any impairment loss previously recorded. So that will be a reversal of impairment loss. And any increase that is in excess of the impairment loss previously recorded, that will be recorded as a revaluation surplus. So this is the rule on the recording of increases in fair value. Again, it will first be applied to the impairment loss previously recorded. Then any excess will be recorded as a revaluation surplus after all the impairment losses have been reversed. Now let's talk about the decreases in fair value. So if there is a decrease in the fair value, it will first be charged against the revaluation surplus if the revaluation surplus has a balance. And after the revaluation surplus balance has been exhausted, which means it is already a zero balance, any excess of the decrease over the balance of the revaluation surplus will be recorded as an impairment loss. So this time, this will be in profit or loss. This account will appear in the income statement, as well as the reversal of impairment loss. This will appear as a gain from reversal of impairment loss, which is a nominal account presented in the income statement. Whereas revaluation surplus is an other comprehensive income account which appears in the comprehensive income statement and close to the other comprehensive income section of the shareholders' equity of the entity's statement of financial position. So this is the rule on the revaluation model before and after the application of the rules under PFRS 5. So how is non-current asset held for sale presented in this financial statement? So for a non-current asset held for sale, it is classified under the current asset. So although non-current asset is obviously not a current asset, but following PFRS 5, since it is already held for sale, it will no longer be classified as a non-current asset. Again, under PFRS 5, a non-current asset held for sale is classified under the current asset section of the statement of financial position. And the impairment loss related to the non-current asset held for sale will be recorded in the income statement as a part of the continuing operation if the group that the non-current asset held for sale belongs is not a disposal group. So to summarize the accounting procedures that we did for the non-current asset held for sale under both cost model and revaluation model. So let's start with the reclassification date. So prior to reclassification, so under the revaluation model, we need to always adjust the non-current asset to its fair value, whether it be property, plant, and equipment or an intangible asset. So under the revaluation model, if there will be an increase, any increase must first be applied to previous impairment that have been recorded. So it will be applied just to reverse the impairment losses that were previously recorded. And any excess of the increase over the impairment loss previously recorded will be recorded under revaluation surplus. Then if there is any decrease in the fair value, the decrease first will be applied against the revaluation surplus balance. And after exhausting the revaluation surplus balance, any excess will be recorded under P&L. So that will be impairment loss. Then at reclassification date, so under the revaluation model, since we already adjusted the non-current asset to its fair value, so the non-current asset held for sale will be measured at fair value less disposal cost. The disposal cost pertains to the cost to sell. And the disposal cost will be recorded as an impairment loss. That is under revaluation model. However, under the cost model of accounting for non-current asset, the non-current asset held for sale will be measured at the lower of carrying amount and fair value less cost of disposal. And the impairment loss will be recorded when the fair value less disposal cost or cost to sell is lower than the carrying value. So in case that the carrying value is lower than the fair value less cost to sell, there will be no impairment loss. So subsequent to the reclassification date, regardless whether cost model, so the rules on the cost model and revaluation model will no longer apply. So following PFRS 5, regardless of the model previously used, the measurement will always be lower of carrying amount and fair value less cost of disposal. So this will be the basis of measurement. And any decreases will be recorded as an impairment loss. And increases are no longer allowed. It is only allowed when there is a previous impairment loss recorded. And the increases are only allowed in order to reverse the previously recorded impairment loss, which means that if there are no impairment losses previously recorded, there is nothing to reverse. So that is why the rule on increases depends on the impairment loss. So if there is no previously recorded impairment loss, there will be no increase. But if there is a previously recorded impairment loss, increases are allowed but only up to the extent of the impairment loss previously recorded. However, once the non-current asset is no longer classified as held for sale, again, the treatment will be different because it will be reclassified back to property, plant, and equipment or intangible asset, where the cost model and revaluation model is used. So if the non-current asset is to be accounted for under the cost model, any increases and decreases will be recorded in P&L. That is, either it is an impairment loss or a gain. However, under the revaluation model, so again, in the increases, the treatment for the increases and decreases depends whether there is a balance of revaluation surplus and previously recorded impairment losses. So the rule on the increases and decreases that we did prior to reclassification is also similar when the non-current asset ceases to be held for sale. So if there is an increase, the increase will still first be applied on the previous impairment recorded, just to reverse the impairment losses previously recorded. And the excess will be recorded in revaluation surplus. And if there is a decrease, the decrease will be first applied against the revaluation surplus, and after exhausting the revaluation surplus, any excess will be recorded as a loss in P&L. So this is our rule on the accounting for non-current asset held for sale. So basically for disposal group, the rule is almost similar, but it is more complex because this is a group of assets. Unlike our discussion, it only involves individual asset. So the discussion for disposal group will be in a different video.